people who are fundamental investors who look at stuff like PE and PB ratios are getting really frustrated with this because a lot of the market isn't sticking to any fundamental rules right now. Hey everybody, Walrus here from Walrus Street, bringing you your news for the week of February 15th, 2021. Just a reminder, I am not a financial professional. All information in this video is for entertainment purposes only. Alright, after a couple of negative weeks, it looked like the stock market kind of picked it back up last week. We finished up over 40 points where we opened on the S&P, which was really nice. So a lot of you probably had some nice green portfolio weeks. I know a couple of my stocks finished up at all-time highs on Friday, and that was really exciting for me to see. And overall, I think it was a really positive week. Let's go ahead and take a look at some of the biggest news stories of the week. Just a reminder, if you're new to the channel, I do publish my technical analysis. If you're interested in it, the link is below the video. For the first news story this week, we're going to combine two of my favorite memes, Tesla and Bitcoin. This is Tesla's latest 10K form that was filed with the SEC. In January 2021, we, as in Tesla, updated our investment policy to provide us with more flexibility to further diversify and maximize returns on our cash that's not required to maintain adequate operating liquidity. This is just Tesla's extra money. We may invest a portion of such cash in certain alternative reserve assets, including digital assets, gold bullion, gold exchange traded funds, ETFs, and other assets as specified in the future. Therefore, we invested an aggregate of $1.5 billion in Bitcoin under this policy, and we may acquire and hold digital assets from time to time or long term. Moreover, we expect to begin accepting Bitcoin as a form of payment for our products in the near future. We may or may not liquidate it upon receipt. Tesla is not only invested in Bitcoin, but they're also expecting to be accepting Bitcoin for payments in the near future for their vehicles. Really cool. That's what Bitcoin's supposed to be. It's a digital currency, not just a store of value. What I thought was most interesting is we may acquire and hold digital assets from time to time or long term. Notice in this part, they didn't specifically say Bitcoin, they just said digital assets. My take on this is that this opens Tesla up to investing in other digital assets in the future, like maybe Ethereum or Cardano or Dogecoin, given Elon Musk's penchant for tweeting about Dogecoin. Next up, another kind of Tesla related news. We have SpaceX begins accepting $99 pre-orders for its Starlink satellite internet service as Musk eyes IPO. The hardware is going to be the dish here. It costs about $500. The service is $99 a month. If you're not familiar with Starlink, the FCC 2 years ago approved SpaceX to launch 11,943 satellites. The company hopes to deploy 4,400 by 2024 in orbit, and they've launched more than 1,000 Starlink satellites and plans to build and deploy even more advanced versions of its satellites. Starlink has over 10,000 users in the US and abroad in about 3 months since the public beta began. The whole purpose of Starlink, other than, making shitloads of money, is to bring internet to the disconnected, to the disenfranchised, basically to every rural area on planet Earth. They're going to have access to high-speed internet transmitted via the satellites of Starlink, and there's going to be almost 12,000 satellites in orbit around Earth. This is going to be something that telecom companies are not going to be able to compete with very quickly because most of them don't have the cash assets and reserves to compete with Tesla, SpaceX, Starlink. This has the potential to be kind of the future of internet connectivity and telecommunications. I love it. Next up, this is from Securities Finance Times, and this is super boring layout, super boring article. I'm sorry about that in advance. If you guys remember what happened just a few short weeks ago with GameStop and AMC, stocks that were heavily shorted ended up being targeted by retail investors. There was a lot of chatter about how these stocks were possibly shorted, particularly GameStop above 100%, and there's an idea floating around that there was naked short selling, which is an incredibly risky, dangerous, irresponsible thing to do to a stock, but it's really difficult to prove. International Brokers, IB, is sued over naked short selling allegations. So the CIBC, Bank of America, UBS, and TD Bank stand accused of coordinating abusive naked short selling and spoofing strategies in the US and Canadian stock markets by a Bermuda hedge fund that claims to have lost tens of millions of dollars as a result. The Harrington Global Opportunity Fund has filed the suit. Even though the short selling is illegal, it was happening, and Concordia, which was a pharma company, their stock price plummeted from $34.77 to $1.83 over 11 months. Harrington is seeking damages, legal fees, and interest. Okay, so this is their claim. It's unsubstantiated. They kind of do have a little bit of a smoking gun, though. It is alleged that in 2016, there were approximately $238 million shares of Concordia stock that were sold short on the Canadian US exchanges, constituting around 58% of the approximate 410 million Concordia shares traded during the period in question. However, Harrington argues that only 40 million shares were actually issued for trading, meaning the short sale turnover rate was approximately 600%. The enormous discrepancy between the 40 million shares issued by Concordia for trading and the approximately 410 million Concordia shares traded during this period represents an astonishingly high turnover rate of 1,000%. Even though this is really difficult to prove, the math doesn't really work here. That turnover rate would be absolutely incredible for a small pharma company. This fund is alleging there was naked short selling here, and the SEC needs to investigate this. Of course, the SEC is one of the most impotent government bodies on the planet, and they're probably not going to do anything, but this kind of supports what a lot of people felt about the GameStop situation. Next up, Biden comes out with an old person idiom and warns that China is going to eat our lunch if the US doesn't get moving on infrastructure. Apparently China's like a schoolyard bully that's picking up people's brown bags and just eating them. Biden had a telephone call with President Xi Jinping of China. His takeaway is that they're investing a lot of money. They're investing billions of dollars in dealing with a whole range of issues that relate to transportation, the environment, and a whole range of other things. You know, that actually sounds kind of like a Trump quote, repeating and just making blanket statements. Biden says we have to step up how we begin this. I've laid out what I think we should be doing. Biden feels kind of threatened about Xi Jinping's investments into Chinese infrastructure. He feels that the US needs to match that. We've been talking about this on this channel for a couple weeks now, that the US is going to be dumping a ton of money into infra, and this is yet another supporting point of that idea. The only problem is that it's going to be really hard for us to do that when we don't have any money. Just kidding. America can print all the money that it needs. Totally safe. Definitely not inflationary. U.S. debt on track to hit a record 107% of GDP by 2031. Federal debt, which reached 100% of gross domestic product in the last fiscal year, is expected to rise to a record of 107% of economic output by 2031. This forecast is based on current levels. That's assuming that we can't significantly increase our GDP. One of the benefits of a transition into green energy, though, is that GDP will be increased kind of secondarily with the infrastructure investments, the technology investments into green energy, the R&D investments associated with it. So investing into new industry is a good way to increase your GDP because that can end up leading to more exports. So while this is negative, and I'm not sugarcoating it, this is super, super negative. I do think we have a way out of this, possibly. Maybe that's just blind hope. Hope not. This is my absolute favorite news story of the week, and this is something that I've been talking about for the last couple weeks, how these companies are releasing their earnings reports, and they're incredible earnings reports, incredible companies, and then right afterwards the stocks tank and they trade sideways. This is from Yahoo Finance. The worst stocks are doing the best. Here you can see it goes all the way back to November. These are metrics from Credit Suisse. The blue line is going to be high short interest stocks, and the gray line is low short interest stocks. High short interest stocks are just detaching themselves and performing at a much higher level. As if this series of negative indicators turning into alpha generators isn't frustrating enough for investors inclined to focus on fundamentals, it gets worse because actual fundamentals haven't been helpful at all. People who are fundamental investors who look at stuff like PE and PB ratios are getting really frustrated with this because a lot of the market isn't sticking to any fundamental rules right now. Interestingly, these signals are much stronger than fundamentally based metrics, Credit Suisse writes, noting that the average reaction to shares of a company that beat on the top and bottom line is a decline the following day. This is something I've been kind of reporting on here. We have companies like Apple having their best quarter ever, going over $100 billion. And their shares just tanking the next day. Why? I don't know. I'm not going to go over the earnings reports exactly, but I talked about Uber and Lyft both being trash companies that don't make money. Here we go. Uber's trading lower after missing revenue estimates. Shocker. Uber lost money in the fourth quarter as expected while revenue shrunk below consensus. The company expects to be profitable by the end of 2021, and delivery services have recouped a sizable share of lost rider income. I briefly mentioned that the difference between Uber and Lyft was that Uber offers food delivery. This was actually massive for them because it did recoup some of that lost income from their lack of performance with normal riders. If we go over to Webull right now and we check the income statement for Uber, everything's super negative. Their revenue's down 22% year on year. Their net income is down almost negative $1 billion, negative $954 million. Not a profitable company. Let's just go over to Lyft. Same thing for Lyft. The revenue is down 44% for Lyft. They didn't really have the food delivery, so they were suffering even more. They're down down 570 million. Their net income is down 458 million, just negative all around for them. But if you look at the charts, Lyft is really close to an all-time high. We're $2 off an all-time high, and Uber is just a couple bucks, $4 off an all-time high. The worst companies are just performing really well. Nobody knows why. Fundamentals be damned. Corsair, you guys know I love Corsair. Corsair beat estimates for fourth quarter. They earned 53 cents per share on sales of 556 million. Estimates were for 46 cents a share and 528 million. Year over year, Corsair earnings rose 152% while sales climbed 70%. And what happened to Corsair right after they reported earnings? Price dropped. Another $4 a share, which for a $40 stock, I mean, that's like a 10% drop after an insane earnings beat. Fundamentals don't matter. All right. Let's take a look at the earnings coming up this week. Keep in mind, Monday is a federal holiday, so the stock market is closed on Monday. Happy birthday, George Washington. Let's take a look. On Tuesday, before open, my baby Palantir is reporting. So I'm going to be following the Palantir earnings really closely. They just had a big partnership with IBM announced, so I'm very excited about this one. On Wednesday, we have Tilray. For any of my pot stock lovers, this is probably going to be a big one. The last earnings report ahead of the merger with Afria. We have Baidu down here, which is like the Chinese Google. Baidu is the only Chinese company that I would invest in other than Alibaba. That being said, I'm not currently invested in Baidu, but I am considering it. Down here at the bottom, we have Samuel Adams Lager. On Thursday, before open, we've got Walmart. Last quarter, Walmart had its best online ordering reporting quarter ever. So I want to see if that continues with the holiday data coming in from Christmas. Also, we have the Trade Desk here, which is a digital ad company. Trade Desk is one that I've been following for several reasons, but I'm interested to see this earnings report. Let's take a look at the charts. So we've got Palantir here. Again, we're up on Webull. Palantir just hit an all-time high of $45 back at the end of January. That was intraday. And right now we're sitting at about almost $32. We did have some red days in a row. Palantir stock lockup ends, I think it's on Thursday. Palantir IPO'd last autumn. The employees are not allowed to sell their shares after IPO for 2 earnings reports. So after the second earnings report, once they go public, then the employees are allowed to unload their shares. What we might see here is a dilutive effect where Palantir shares just drop on Thursday, and they might drop huge, depending on how many employees flood the market with their stocks. And if you remember, Palantir IPO'd at about $10, so we're already up 3x on that initial price. If not many of them sell, then we can feel that there's a lot of insider confidence in what Palantir's doing. I do want to take a closer look at this. You know, Palantir has been putting out a lot of news about partnerships, but this one, Palantir partners with IBM to provide AI-driven business solutions. This is their biggest partnership ever. The new product, Palantir for IBM Cloud Pak for Data, is expected to be available by March of this year. And the partnership is targeted towards businesses who need to analyze and access vast amounts of data, including retail, financial services, healthcare, manufacturing, and telecoms. One of the reasons why I'm so excited about this, I went and looked up the sales departments. For IBM, they've got about 2,500 people in their sales department. Palantir has about 100. So Palantir is unlocking a sales department through this partnership that's 25 times larger than their own. That's going to be more people getting exposure out about Palantir, potentially selling the virtues of the software. This is a partnership that's going to benefit both companies, and I think Palantir is actually getting the better end of the deal here. Next up, let's take a look at the chart for Baidu. This one is just incredible. If we go back, beginning of December, Baidu was trading at $140 a share, 2.5 months ago. Since then, we're up all the way at 313. Baidu has something like over 700 patents in its arsenal. They're focusing a lot on AI. And if you go over to the news for Baidu, you can actually see they are in talks to raise funds for a semiconductor company. This is going to be an AI chip company. So AI chip semiconductors, which are the future of semiconductors. Baidu's in talks for raising money for creating their own proprietary chips. This is a very promising company. Like I said, it is the Chinese Google. And this is one Chinese stock that I would be comfortable investing in. Of course, I would be more comfortable if they permitted third-party auditing, which is something I don't like about any Chinese stocks, but that's just on my wish list at this point. Next up, we have Walmart. After Walmart's last earnings report, which came out here midway through November, we went up another $3 and then we've dropped. And we've actually dropped since that earnings report, and that earnings report was incredible with the online sales increase showing that Walmart can actually take market share away from Amazon. This was an awesome earnings report, and the stock's been trading negative to sideways since that earnings report release. You know, if you're wondering how I know the earnings report, you could see right here on Webull. They have the 5E for the November 17th earnings report. It's actually starting to look like Walmart is a bit of a value here, coming in at $144 a share. The forward PE is 25.8. And if you remember from last week, the average PE ratio for the US stock market is like 34. So Walmart is one of Amazon's biggest competitors. It's posting great earnings, and the PE ratio is significantly lower than the average on the stock market. Walmart is looking like a serious value right now. One would even say it's a great value. That's the Walmart store brand. Sorry if I didn't make that clear enough. Last one I want to take a look at is the Trade Desk. Trade Desk provides a self-service platform that enables clients to purchase and manage digital advertising campaigns across various advertising formats, including display, video, and social on a range of devices, including computer, mobile, Connect televisions. They work with ad agencies and ad placements. What's really impressive about Trade Desk is their growth since the COVID crash. Now we could see here when the market crashed at the end of COVID, Trade Desk dropped and bottomed out at $136 a share. As of close on Friday, we're sitting at $864 a share. In the last 11 months, this company's actually gone up about 6 times. 6 times? I don't know. I can't do math. Somewhere around 6 times in value. This is absolutely nutty. That's it for the news this week. I'm sorry again, I don't have any trades to show you guys. I'm still waiting on closing out my options on Robinhood before I transfer my account to Webull. I still have 2 short-dated options that I wasn't comfortable closing out at the current prices that they're at, and you can't transfer accounts with open short-dated options. So I'll just wait another week. That's fine. I am slowly funding my Webull account though. I am going to start showing you guys some trades definitely next week on my Webull account. I hope you guys enjoyed the video. I will be releasing a DD video. Keep in mind my DD video this week is going to be posted on Tuesday morning, 9:45 Eastern time. The reason is because the market's closed on Monday, so instead of posting it Monday at 9:45, I'll post it Tuesday at 9:45. I'm not going to give you any hints as to what it is, but it is another pretty good one. Very interesting company. I'm much more bullish on this week's DD than I was on last week's, so I hope you guys are excited about it. I'm excited to put it together for you. Also, I already have next week's DD planned out, and as a bit of a special treat, I have contacted some of the investor relations people at the company for next week, so I will be getting some statements from them, some information from them. I'm having a Zoom call with them on Tuesday night. I'm very excited. A lot of things coming together. I got some good content coming for you guys. Hope you're enjoying. If you do enjoy the content on the channel, please like the video, subscribe to the channel, and if you want to be alerted to all my content as soon as it goes live, make sure you hit that notification bell. For anybody who's new to investing, my Webull referral link is below the video. If you click on that link, you get some free stock, I get some free stock, everybody wins. Plus you get to use this cool platform like I was demonstrating in the video today. All right, guys, I'll see you later. Have a good day.